Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Ching Yi. Good evening. Today is Thursday, November 13th. I'm analyst Jang Jita from Sanhao Investment. Remember to like, subscribe, and share for us. If you have any investment questions, feel free to leave a comment. If I don't get to answer your question today, I'll make sure to follow up and address it in tomorrow's class. As usual, I'll answer questions from students asked yesterday. Good evening. Today is Thursday, and after one more day, it'll be Friday. Coincidentally, today the U.S. government reopens. What should we pay attention to now that it's open? The House passed a temporary funding bill, expected to last until 2026. At least until the end of January next year, the government won't have funding issues. So under these circumstances, what exactly will happen to the US dollar's trend, including capital flows and the economy? Plus, there's a whole slew of economic data about to be released. How should we respond to all of this? Secondly, regarding the credit rating agencies, what exactly did Moody's warn about? What was the content of Moody's warning? It includes opinions on the US stock market, even some overvalued companies, or different perspectives on the economy. As for the content of this warning, should everyone be worried? Tonight's show will explain all of this one by one. As for the industry side, regarding earnings reports, we're nearing the end of the earnings season, and from yesterday to today, several earnings reports have been released, especially from companies related to semiconductors. For example, Infineon and Cisco have both announced their earnings. The performance in the earnings reports for the third quarter was better than expected and quite impressive. Of course, the most important thing is the AI industry chain. How did AI data play a role within these 3 companies? If you happen to hold shares in any of these 3 stocks, with the boost from the AI sector, do these companies have a chance to keep rising? As a preview, out of the 3 major companies, 2 are definitely strong and worth paying attention to, but the other one is better to watch for now. These are the main investment highlights we'll be discussing in today's Mostly English program. Alright, good evening everyone. Let me see who's online. There's Hu Juan John, and good evening to Xiaoma Lu. Also, hello to the staff, Yulan Gay, and Mei Daitzi Alice Fu. Good evening to Fei Yu Ye, and who is this? Is there a new classmate? Oh, Mei Daitzi is playing with Tin. WXYZ. Oh, I'm not sure what your Chinese name was originally. Maybe you're a new classmate? I'm not sure. And then there's another one called Papanelawong 1249. That's quite a long name. If you have a Chinese name, you can use that too. That way, I can do roll call for everyone one by one. Now, regarding whether gold has finished correcting and started to rebound, this is what panel 1 asked. Currently, gold is like this. I haven't put up the chart right now, but I remember a while ago, a classmate also asked about the chart in the group, so I'll briefly mention it. Looking at gold overall, just remember that whenever the US dollar is weakening, the US dollar index is going down, or the dollar, or let's say interest rates, let's put it that way. When interest rates are cut, right, with rate cuts, the US dollar tends to weaken. The relationship between the dollar and gold is like a seesaw, so the more the dollar falls, the more gold rises. Just remember this concept. Now, will the dollar continue to go down in the short term? Over the past 3 to 4 months, at most, it's been more of a sideways consolidation pattern, but rate cuts themselves do tend to make the dollar weaker. Rate cuts make the US dollar weaker. Looking at December, rates will likely stay unchanged with no cut. In September and October, rates were already cut. So this December, the market probably won't expect another rate cut crisis, and rates will likely remain the same. But next year, under the pressure and leverage from Trump, the number and frequency of rate cuts could still increase. In this situation, of course, as interest rates go down, the US dollar will also fall, which means the price of gold could rise at any time. Gold could keep climbing. It's just that in the short term, since it's been going up and up, reaching over $4,000, setting a new all-time high, it's inevitable that there will be some corrections or pullbacks after such a big rally. So if you're really trading these more volatile financial products like gold or oil, just remember to use the 10-day moving average, the 5-day moving average, or even the 20-day moving average as your final support for the bullish side. If it breaks below those lines, try to exit for a while. When it stabilizes above the monthly moving average or gets back above the 5 or 10-day moving average, then consider a short-term trade in and out, which is safer. For now, gold still seems to be in a pullback phase after a big rally. It's not in a bearish trend yet, it's not turning bearish, but right now it's still in a consolidation phase during this pullback. Once that's done, there's still a chance for it to move up. It just needs a bit more time. At least for December, since interest rates haven't been cut and will probably stay the same in December, in this situation, the boost for gold will be relatively limited. So that's a simple answer to our classmate PA's question. And Hector, good evening, good evening. Zong Bowen, right? Bowen, good evening. Hello, hello. And Hui 2025, hello, hello. So what do you think about Tesla and NVIDIA? That's something we can discuss. I didn't prepare candlestick charts today, and I didn't answer this yesterday either. Yesterday, NVIDIA's stock price rose and we talked about it. We also discussed NVIDIA and AMD recently, and right now, the price hasn't changed much. For Tesla, it's about looking at its core business, focusing on main operations. Also, Tesla and Musk just got that $1 trillion compensation plan approved. So next, it's about how their core business develops and their side businesses, like robots, FSD, Lunalink, and Starlink, those too. How well these things are done will all add points for Tesla. Even though he said that his forecast for the next 10 years, I remember his goal is to reach an $8.5 trillion market cap, and Musk could end up getting a $1 trillion compensation. Will he reach this goal in 10 years? We don't know, but what we can say is that as long as Musk doesn't get involved in politics and keeps his focus on his main business and side ventures, I think Tesla's stock price still has a chance. It still has potential. It just needs a bit of time, after all. His car delivery numbers haven't been good, really not performing well. Okay, Ken Lin, Kenny, good evening, you see? All right, let's take a look at today's investment highlights. After that, once you greeted everyone, today, the US government, because it's open for business. Just a reminder to everyone, the government has only just reopened, so a lot of economic data won't be released that quickly. But I'll still give everyone a brief preview, okay? A preview. In the next few days, maybe this Friday, maybe that's the soonest, or next Monday, or even sometime next week, some of the economic data that wasn't released before might be published then. This includes, for example, the monthly and yearly rates of October CPI, so just keep that in mind. In fact, last month, actually the month before last, because both September and October's data haven't been released yet, none of it has been published so far. So for the last available data, the monthly rate was 0.3%, and the annual rate was 3%. As for the core CPI, which is the inflation data after excluding the price fluctuations of food and energy, what we call the purest inflation data, we refer to it as core CPI. As for this data, in the last report, the monthly rate was 0.2% and the annual rate was 3%. So from these numbers, you can see that the monthly rate has been holding steady at around 0.2% to 0.3% with not much overall fluctuation, and the annual rate has also stayed around 3%. So keep that in mind, everyone. Now that the US government is reopened, the upcoming economic data will be released gradually, one after another. When these are released, you need to remember one thing, a key principle, which is that the most up-to-date tools, the most current data, the latest numbers, will always be much more important than the data from a month or two ago or from the 43 days when the government was shut down. In other words, no matter what you see in September going forward, or in October, whether it's non-farm payrolls, CPI, PPI, or any of those other data points. In the past, these data points were important, but since 2 months have already passed, their timeliness has definitely decreased. As the relevance fades, you need to treat those numbers as just a reference and focus on the future instead. That includes looking at what changes might happen in the data for November and December, because those could once again influence which direction the Federal Reserve will take in its next interest rate decision in mid-December. Whether the Fed will lean more towards a hawkish or dovish stance depends on the latest data, not on the data from August or September, because that's already in the past. Okay, but should you still look at it? Yes, but just treat it neutrally. This also includes high-frequency data, like the weekly U.S. jobless claims and continuing claims. In the past, each week, the average number of initial jobless claims was about 200,000 to 230,000 people, and the number of continuing claims stayed around 1.9 to 1.96 million people. That's basically the reasoning. So next, when you see the initial and continuing jobless claims data being released, you should have a mental benchmark. Simply put, it's to make an anchoring effect. You need to have a reference point in your mind. Before the government shutdown, you should know roughly what range the economic data was in during that period. Just remember that and you'll be fine. For example, as I mentioned, monthly CPI is about 0.2 to 0.3%. Annual CPI, core or not, is generally around 2.9 to 3.1%, averaging about 3%. Initial jobless claims are expected between 200,000 and 230,000, same for continuing claims. That is, between 1.9 million and 1.96 million people. This is the range. This is the anchoring effect you should establish first. As long as the numbers don't significantly exceed this range compared to the data released in previous months, like September or October, you can use it as a benchmark. If, after comparing, you find that the numbers aren't much different from this original range or from this anchored data, then you should view it neutrally. Don't just follow the market. Don't say, today they release employment numbers, or tomorrow they release the CPI. You might ask, but teacher, that's September's data. What about October? Now there's September, October, and November data, so which should I use as the main reference? That way, you won't get confused. Remember this. Let me say it again. Always focus on the latest data. Use the most recent November and December data as your main reference. You can look at past data for reference, but when you do, remember the anchoring effect. Just keep that argument in mind. So don't get all worked up when the news releases new data and everyone starts getting anxious and doesn't know what to do. It's exhausting. All right, and good night to Jeffrey. Good night, Jeffrey. So does that mean old data is never released? Not necessarily. Not necessarily. I'll talk about that in a bit. Now, about the White House secretary. What's their name again? That blonde-haired, blue-eyed one? What's their name? Violet? Or is it Lightway? Anyway, I'll talk to you about them in a bit. They said that some data will never be released again, but some might still be published. As for the question Xiaolong just brought up, since Xiaolong's question is really long, like 6 lines, I might not have time to go through it all in detail, but let me give you a quick answer. When the US government reopens, what did you ask? Why didn't the dollar index drop sharply and so on? Well, when the US government reopens, it's generally a good thing for the economy. Oh, right. It's also good for the dollar, because when the economy is stable, people don't get anxious or worried that the economy is bad and the government can't function. So when the US government reopens and operates normally, it actually helps keep the dollar stable. That's why it's normal for the dollar index not to drop. It wasn't supposed to drop in the first place. It should be holding steady at that level, and it's actually more of a positive, even a bonus for the dollar. As for the other things you just mentioned, like Pingguigu, Largan Precision, and so on, I'll try to find some time tomorrow to get back to you about those. Alright, let's circle back and take another look at them then. Let me answer a question from a student yesterday. Who was it? Kai Fengzhou, right? Fengzhou, are you online with us? Yesterday, Fengzhou left a question on the message board. He asked about energy concept stocks, specifically about the stock with the English ticker Energy Fool. Its code is 4U's, UUU. As for this company, actually about a month ago, when we were talking about the booming AI industry, we mentioned that it needs a lot of electricity and energy, right? And even Trump is actively trying to promote the continuous development of America's electric power and smart grid, or energy sector. Trump doesn't want to use what? He doesn't want to use solar power, doesn't want to use wind power, doesn't want to use hydropower. What does he want to use? He wants to use fossil fuel power, natural gas, and especially nuclear power plants. The concept stocks related to these plants like UUU, UEC, SN, Oklo, and small modular nuclear reactors are all included. A month or two ago, these stocks were all seeing multiple times growth. We actually talked about this on the show a month or two ago about how they were going up by multiples. For example, UUU went from $5 to $27, and UEC also went from about $5 to around $20. Each of them increased by 4 to 7 times, which is a huge jump. In the short term, after the hype, people ask about these energy concept stocks. After rising 5 or 6 times, now they've dropped from 27 or 28, falling below the quarterly moving average. So what should you do? Let me explain. These kinds of energy concept stocks are really just driven by hype. They're all about the story or the theme. When there's a hot topic, they take off. You should just try to follow along, ride the wave, and go with the trend while it's hot. But when the market stops bringing up this theme and it's no longer being hyped up, what happens? In the short term, the excitement cools off. When that happens, remember, you need to act quickly, be fast on your feet. You need to get out quickly, okay? Now, take Ooze, for example. Its headquarters are in Canada, and mainly it operates in the US, focusing on the acquisition and exploration of metals like uranium and vanadium. Do you know what uranium is used for? It's a crucial raw material for nuclear power plants. So, in the short term, these personnel-related concept stocks are getting attention. You might ask whether there's still room for growth in the future with AI development or with Trump's policies giving it a boost. Of course there is, definitely, because we need electricity, right? AI really needs computers, and whenever you run anything, those machines get incredibly hot, almost to the point of burning out. The power consumption is extremely high, so electricity is something that a lot of tech companies, especially AI companies, really need. It's an essential backup system, a crucial resource. That's why, in the future, these energy concept stocks will still have their market. There's still demand for it, but in the short term, like these past 4 months, if we look at this stock, 4U, it went from $5 to $27, an increase of almost 5.5 times. So how much more do you expect it to keep rising? It's gone up 5.5 times, and that's just in 4 short months. So a pullback or correction after such a big jump is totally normal. In the short term, if it still can't get back above the 50-day moving average, then the pressure for this period of consolidation and correction will remain. We'll have to see when it can stabilize again. The 50-day moving average, so we just need to wait until it gets back above that before looking for another buying opportunity. That's a quick update on energy concept stocks for everyone. Good night, sleep well. Now, let's take a look at the White House. The House of Representatives has passed a temporary bill, and funds are expected. There will be steady cash flow until the end of January next year. So what about the White House today? Since the House and Senate passed the bill, the government is reopening right away. After 43 days, finally, the doors are open again. If you think about it, during these 43 days of the US government shutdown, it seems like nothing much really happened, right? It actually seems fine. There wasn't any huge spike in unemployment because of the government shutdown, nor did the US economy suddenly collapse or the stock market crash. It's not like it was the end of the world or anything. So the US government shut down for 43 days, setting another record high in history. It's really quite unbelievable. Even with the US government shutting down for 43 days, the world kept running as usual, and so did the US. Everyone should remember this for the future. As the saying goes, a US government shutdown is never just a one-time thing, and it won't be the last either. Remember, every time the government shuts down, it always reopens in the end. Of course, that's obvious. They always reopen. So every time the government shuts down, it opens again. And each shutdown's impact on the economy is manageable, within a controllable range. After reopening, it may take a few weeks, but things get back on track, and the US starts booming again. That's the idea. So for the US government, just remember this. After 43 days of shutdown, will there be more shutdowns in the future? There's a 200% chance it'll happen again. It's just a matter of when and how the House and Senate, the Republicans and Democrats negotiate and reach a consensus. In the end, they always come to an agreement. It's just a question of how long it takes. At that point, the White House ordered 600,000 federal employees to return to work. Everyone came back. All of them returned. That's how it was before. All those on unpaid leave came back to work because the government needs to keep running, so everyone just returned to their jobs. Now, the White House press secretary, Leavitt, said that because of the government shutdown, the employment and CPI data for October might never be released. Actually, in a way, what they're telling everyone is that you don't even need to look at the data before October. It's basically irrelevant now. So whether they release it or not doesn't really matter. You get it? It just doesn't matter anymore because they're saying the employment and CPI data before October won't be available. Since no one is working, there's no one in the government, how can you produce any data? There's no one to do the statistics. So after the government reopens, what then? When it reopens, then are they going to pull out the September data and the October data after reopening? But who would even want to look at it by then? It's like, say we're doing the Goodnight Hero show every day, right? Every day, it's all fresh content, and then suddenly, one day, an episode from a certain day in September is missing. And now it's already mid-November, right? Then I suddenly tell everyone, back on September 15th, our show had a network outage, so there were no episodes for 3 whole days. So today, we're going to make up for it and tell everyone what the highlights were for the mid-September episodes. Would you listen? Of course not, right? Same logic. You'd think it's ridiculous, wouldn't you? That's the idea. So when the US government reopens and tells you about September or October data, do you still need to listen? No, it's the same situation. Even if they say they'll never release it, if they don't, they just won't. It's not that important. Just look at what's happening recently. What about Morgan Stanley? They said things like September employment data, September retail sales, PPI, third quarter GDP, and October employment figures will be released gradually from mid-November to December 8th. Are they important? Just take a look, and that's enough. I think the more important ones are probably the employment data, which you can use as a reference, and the third quarter GDP. When it's released in early December, just take a look and get a general idea. That's basically the concept, because all of this is already in the past. It's already happened. Okay, Trump. The US is also waiting for stimulus checks, right? That's a short-term positive for the US stock market, helping to boost corporate profits. By the way, this username is really long, the one with the green mark. Mr. Zinn asks if Trump's stimulus checks are really that positive. It's not much of a boost. As you said, the stimulus is just the US giving tax rebates. Each person gets a $2,000 dividend. We discussed this yesterday. $2,000 is about NT 60,000. That's not a lot. You might say, teacher, Taiwan only gave NT 10,000, but the US is giving NT 60,000. But don't forget, prices in the US are 3 times higher than in Taiwan, so actually the impact isn't that big. You ask, just because they hand out this money, whether it's 10,000 or 60,000, are people really going to go on a shopping spree and buy a bunch of stuff? Let's say your house is only missing a 40-inch TV. Just because you get 60,000 or 10,000 in cash, are you really going to upgrade your 40-inch TV to an 80-inch one? Of course not, because your TV stand is only so big. That's just how it is. Why buy an 80-inch TV? Where would you put it? Fridge or bathroom? No one would use it. This might boost the economy a bit and get people to spend, but only for a short time. And if you ask if the short-term impact matters, honestly, it's not that big. It's just a small amount, a little money. Honestly, it's not much at all. Good night, Joe. Kai Feng Zhou answered your question about the related USL issue because of your question. Now, panel 1 asked, is it important for the right parentheses? If I use NRL ETF for long-term allocation, is that okay? Yes, that's fine. That's fine, but remember, for ETFs, buy in batches, especially when prices dip or are stable. For some themes, check the component stocks in those ETFs first. With ETFs, including Taiwan's, like 0050 or 0056, they all have certain component stocks. You need to know which ones they include first. Don't just buy randomly. If those component stocks perform well, then of course that ETF will go up. So you need to understand the cause and effect relationship first. What is the cause and effect relationship? The cause is whether these component stocks have potential for future development. The ETF you buy in the stock market consists of these components. The ETF rises because these stocks perform well. Don't think buying an ETF guarantees profits with no losses. There's no such thing. Nothing in the market is a sure win without risk. Everything has risks, so you must first understand what the component stocks are. If the component stocks have just been consolidating recently, if they're consolidating or still dropping and correcting, you shouldn't buy the ETF yet. That's the idea. You need to know its component stocks first. Once you understand that, you can buy the ETF. That helps spread your risk. You can do it that way, but make sure to invest in batches as you build your position, okay? Alright, maybe after a few weeks, the US government will get back on track. But remember, the latest data is still important. You really have to remember, there's no need to keep looking at the past. Just let it be. Now, focus on what's important right now. So, regarding the official statements, of course, there are a few that stand out. For example, Bostic, official Bostic, he's not a committee member this year, he doesn't have voting rights this year, and just recently, he suddenly announced that he will retire in February next year. He's been around for a long time, and with his retirement in February next year, he only mentioned that inflation is currently the biggest risk, and he tends to favor keeping interest rates unchanged until we make progress toward the 2% target. Another voting member, Collins, shares a similar view. Basically, the labor market hasn't deteriorated. And of course, when it comes to inflation, if there's going to be a rate cut, it would only happen once inflation returns to 2%. So overall, whether it's Bostic, Collins, or even the so-called Fed whisperer from the Wall Street Journal, who is known for often having insider information and scoops about the Fed, their views are pretty much aligned. So he often comments on whether, for example, this time's rate decision will result in a rate cut or not. He's usually pretty accurate, probably because he has some inside information. So, according to Nick from the Wall Street Journal, the 4 voting members are actually not very enthusiastic about another rate cut in December. So, overall, I think December's rates will likely remain unchanged. Keeping interest rates unchanged will be the more important tone at this stage. Okay, Amber, good evening. Good evening, Amber. Now, in addition, we should pay a bit of attention to what the rating agency Moody's has to say. Moody's chief economist, yes, the chief economist, Zandi, said this. He said that this year, AI contributed 0.63 percentage points to the U.S. GDP. He said that without the help of AI, the U.S. economy might have already gone into recession this year. So, thanks to AI, it contributed 0.63, but he also said that even with AI's development next year, it still won't be able to save the U.S. economy. Why? His argument is that it's because of Trump's trade war. The trend to deglobalization could cause unexpected fluctuations in U.S. prices and the economy. So the economy, even with the help of AI, because of this deglobalization and the impact of tariffs, the U.S. economy will fall into recession next year. How much will GDP drop? It will drop by 1.1 percentage points. So, should we be worried about this? Should we be worried? I think in the short term, we do not need to worry about this. In the short term, there is no need to worry. Although the goal of stabilizing prices is very important, why do we not need to worry in the short term? First, do not forget, the U.S. government has an election next year. The U.S. will have an election, with the midterms on November 3rd next year. So both the House and Senate, Republicans and Democrats alike, will be doing everything they can to win votes and boost their poll numbers. So next year, they will roll out a lot of policies, real benefits, policy incentives. There might be tax cuts or even dividends. For example, if they originally said the tariff dividend would be $2,000, it could suddenly become $20,000. Of course, that would be a huge boost for the stock market, things like that. Or say the Democrats and Republicans might reach a new consensus on healthcare or medical subsidies, which would further improve the overall economy, public opinion, and people's livelihoods. This is what we call a rising tide lifts all boats. Everything looks good, the economy's doing well, maybe it'll turn out that way. The main point is there might be a recession next year. AI can't save the US economy because of deglobalization and tariffs, but remember 2 things. First, as I said, there's an election next year, so there will be many policy incentives. Second, if you look at February, March, and April this year, countries worldwide have been imposing tariffs, and it's still happening now. From February this year until now, we've basically been in a trade war for almost 10 months. Everyone has noticed one thing. Trump, at the beginning, is always really tough, really hardline, and he'll impose really high tariffs. But as long as other countries are willing to negotiate with him, willing to make concessions, willing to invest in the U.S., set up factories in the U.S., or help balance trade by importing more American products, then what does Trump do? He'll back down. He'll keep lowering and lowering and lowering. If he sees the stock market taking a big hit or the economy getting impacted, what does Trump do? He won't be so tough anymore. So besides next year's election, there's another reason Trump might keep backing down, because the impact of these tariffs will just keep getting worse. First, the lower the tariffs are reset, the more inflation will drop, and as inflation drops, consumer spending and the economy will become more stable. So this is really like 2 ends of a seesaw. That's why I think Moody's opinion is just for reference for now, because at the moment, it looks like this. To be honest, the impact on next year isn't that significant either, really not that significant. So I just wanted to add some related perspectives for everyone. Okay, as for the US 10-year yield, it's at 4.071% and hasn't changed. The terminal rate remains at 3.73. What about the rate cut schedule? It's still at 0.55 percentage points. What about the US dollar index? Today, it dipped slightly by 0.31 percentage points, but it's still above both the 20-day and 50-day moving averages. Over the past 6 months, it's mostly fluctuated between about 96, 98, and 100. There hasn't been a big surge up, nor has it crossed above the 200-day moving average. Even when it dropped again yesterday and hit new lows, it didn't seem to have much momentum. It's just been moving between the 20-day and 50-day moving averages. So the US dollar index will likely keep this pattern until year end. There hasn't been any change. Unless the trend reverses, if I'm not trading US dollars, this is the situation. That's the idea, and it's about the same for the US dollar to Japanese yen too. Okay, what about the other one? Besides what we just mentioned, that Trump would taco, in fact, in an incident that happened today, we can also clearly see that Trump is authorizing Basent. All right, Trump authorized Besant to be the Secretary of the Treasury. So what did Besant announce today? He announced something about coffee, and what else? Bananas, right? Bananas, banana chips, coffee. Are coffee and bananas? Everyone knows, right? Coffee is a diuretic, and bananas might help with digestion. So sometimes I wonder if you pair coffee with bananas, so would this actually be good for your digestive system? I'm not sure if it could have the opposite effect, since bananas help digestion and coffee helps urination. I don't think I've seen any coffee banana flavored products, but there are banana chocolate ones, right? This made me realize there really isn't a coffee banana combo. Maybe the two clash, so there isn't such a product. Maybe it could cause diarrhea. I don't know. If anyone knows, let me know. You can reply or share your thoughts. What do you think about coffee and bananas together? There are also tariff reductions on a variety of daily necessities, and it's important to understand why these reductions are being made. As for coffee, don't forget about this. What I'm announcing today, in fact, we actually mentioned this to everyone just yesterday or the day before. And unexpectedly, today, Besant just happened to announce this as well. Americans really love drinking coffee. 1/3 of the coffee consumed and imported in the United States comes from Brazil. And what about Brazil? Just this August, Trump imposed tariffs on Brazil. What kind of tariffs? A 50% tariff increase. What did this increase target? It included their coffee beans and their oranges. So now things like orange juice, oranges, and even coffee have all gone up in price because you slapped a 50% tariff on them. But the reason for this isn't just what you might think. It's not because the US has a trade deficit with Brazil. No, that's not it. It's simply because the current president of Brazil seems to be politically persecuting the former president, or something along those lines. So maybe the US isn't happy about it. Like, hey, how can you go after your political opponents like that? Something like that. So they're just not pleased. So they impose countermeasures against Brazil's current president for this reason. Now, what did Vicente say today? Regarding coffee and bananas, the tariffs have actually been reduced. Why the reduction? Weren't they pretty strict before? You see, they immediately cut them. Why reduce the tariffs? Because too many Americans love drinking coffee. Take Starbucks, for example. Most of the coffee beans they use, 1/3 of all coffee consumed in the United States, comes from Brazil. If you slap a 51% tariff on each kilogram, a cup of coffee that originally cost $10, let's say $10, if you add a 50% tariff, how much does that increase the price? It would increase by at least 30%. If you raise it by 50%, people probably can't handle it. Even a 30% increase means your $10 cup of coffee becomes $13. What will definitely decrease? Consumption and revenue will go down. So this will also push prices up across the board. That's why today, Trump has authorized Besant to say that including coffee, bananas, and many other daily necessities, not just coffee and bananas, but many daily necessities, will all be exempt from tariffs, okay? Then Besant directly said that the public can expect to feel economic improvement in the first half of next year, 2026, okay? So why is that? Because the trade war will likely ease as next year's important election nears. It's crucial people feel the difference and prices don't soar, like coffee jumping from 100 to 130, making it unaffordable and people can't enjoy it. Otherwise, polls could drop. So if you don't tax this and even offer tax rebates, and fishermen get another $2,000, people will vote for whoever. They'll vote for the ruling party. There's this kind of feeling, you know, because you're obviously about to have an election. So to some extent, this is actually related to the election. So this thing, it actually eases the worries about inflation rising. And in fact, it will be acknowledged as going down. So that's the message. For the US economy and for the livelihood goods in the US, this will also be relatively favorable. As for the Russian diplomat saying something about being ready to negotiate with Ukraine, and then Ukraine saying, oh, there won't be any negotiations before the end of this year, well, this kind of never-ending drama can just be taken as an example. That's it. These drawn-out things, just take a look and move on. Ukraine and Russia aren't really going to negotiate anyway. They've been fighting for 3, almost 4 years now, so it's been going on for a long time anyway. If you say they'll negotiate right away and reconcile, it's not that easy. Israel and Hamas have very complicated issues too. So just understand the situation and watch it. That's enough. As for crude oil prices, they're still bearish now. Today, they dropped 0.41%, so it's the same. It's now fallen below $58, and in the short term, it's still showing a bearish trend. Bananas reduce the effectiveness of cocoa. Bananas reducing the effectiveness of cocoa isn't good, right? Oh, okay. Smile. Good evening. Why does he say it reduces effectiveness? Then, why do you see so many things? He's talking about banana cocoa flavor, but I don't know what effectiveness it's supposed to reduce. Maybe if any classmates are nutrition majors or a nutritionist, they can answer this for us. So, is banana with cocoa actually good for your health or not? If it's not good, then everyone should eat less of it. If it is good, maybe you can write about why that is, because I really don't have time to follow up and look into what kind of scientific information is out there about this. Alright, now let's take a look at the economic data section. Of course, over the next couple of days, we'll see things like CPI and PPI. If they're released in time, we'll report them. If not, we'll still provide you with the relevant preview numbers and past figures as a supplement. As for earnings reports, Infineon, Glongfong, Jushi, and Disney are all releasing theirs. Tomorrow is more important. Honestly, this week the key thing to watch is Applied Materials. Just keeping an eye on Applied Materials is actually enough. Of course, today I'll also spend a little time giving you some additional information about these three companies and why we just mentioned them. Some of the AI-related turnaround themes are connected to these three companies. Not Disney, though. Disney has nothing to do with AI. The three I mentioned earlier, Infineon, Glongfong, and Cisco, are related. But Disney, well, Disney is just... Speaking of Disney... Xiaobai and Teacher Zheng both know that I still have 10 days of annual leave left that I haven't used, right? So next month, I was originally planning to go to Japan. I really wanted to go to Japan, but right now I'm still checking out some attractions and looking at ticket prices here and there. I'm still working on making the arrangements. So before, some of my classmates suggested that if you're going to Japan, you have to go to Tokyo Disneyland. They say it's really fun, maybe even the best in the world. You could go to Disneyland in the US or Tokyo Disneyland. These two are the ones most people recommend. Some people don't really recommend Hong Kong Disneyland. If I get the chance to go, I'll share my experience. But for now, looking at our plans for next month, even if we go abroad in December, we probably won't go to Disneyland. It tastes good, but the banana reduces the effect of the theobromine. Okay, so Disneyland tickets are really expensive. So what exactly is the effect of theobromine? What does theobromine do? Does it reduce, like, anxiety or relieve stress? Or is it anti-cancer? Or does it have some kind of uplifting effect? I often hear about theobromine, this kind of thing, because cocoa itself contains this special ingredient. It's like green tea polyphenols and green tea. When you drink tea, there are polyphenols in it, right? And those are supposed to be effective against free radicals and good for your body. So some people say eating cocoa, and by cocoa, I mean you shouldn't eat those really sweet chocolates. You know, back when we were kids, there was that kind of chocolate called Big Pineapple, right? Big Pineapple? It was divided into little square blocks, one after another, and looked like it was cut in a tic-tac-toe pattern. If you know what I mean by Big Pineapple chocolate, you're from the same era as me. But if the new generation doesn't know what Big Pineapple is, or has never heard of 77 Nougat chocolate or Zilu chocolate, then you must be from a much later generation. Back then, that Big Pineapple chocolate was cut into squares, and it was really sweet. Super sweet, but tasty. When we talk about healthier chocolate that's better for your heart and overall health, try to eat chocolate with higher cocoa content, above 50% or even 70%. But with chocolates that have 70% cocoa, called dark chocolate, some people avoid them because they're too bitter or astringent. Still, chocolate with about 50 to 70% or more cocoa is better for your health. Otherwise, if you eat chocolate that's too sweet, it's really just sweet. Foods that are too sweet aren't good for your body's cells, especially because cancer cells in particular love sugar. So eating very sweet things isn't necessarily good for your health. So if you really like eating chocolate, try not to choose chocolate that's too sweet. Try to go for raw chocolate or similar types, which are a bit healthier. Sure, Dabalo is delicious, that's true, but it's very sweet, really sweet. Someone mentioned, thank you Smile Smile, for saying it helps prevent cardiovascular diseases, improves insulin sensitivity, and relates to blood sugar control. Thanks for sharing. Cocoa does have benefits, so eat more. Just avoid the really sweet ones. How did we end up talking about cocoa? Why did I call it Gedge? I forgot. Earlier, we discussed banana and banana-related stocks while reviewing financial reports. Growth Function's financial report was released today. For the third quarter, revenue was $1.69 billion, up 2.9% year over year, meeting expectations. EPS was 41 cents, also above expectations. The main point mentioned was... In the automotive sector, they have a lot going on. Automotive semiconductors, communications, you name it. They said that the automotive segment, communications infrastructure, and especially the data center end markets all achieved strong year-over-year growth. Additionally, estimated revenue for next quarter, quarter 4, is $1.8 billion, meeting expectations, but earnings per share is only 47 cents, so it just matches market expectations. Even though the market sees its quarter 3 financial report was good and in line with forecasts, but for the fourth quarter, the EPS is only in line with expectations, so overall, the market might still have some doubts about GlobalFoundries, specifically regarding the demand for mature process nodes and their capacity utilization. So as we can see, even though the financial report is pretty good, and they mention some AI-related developments that could help their future revenue, there are still some lingering concerns. It's true that there is some help, but because of these doubts and the resulting impact, we saw that the stock price in yesterday's shareholder relations session actually opened high but closed low. It opened high and closed low, and in fact, it dropped by 1.84% yesterday. In the short term, honestly, its price movement is very different from many AI or semiconductor companies. Why? Because after all, it's not fully tied to the AI theme, so its stock price, to be honest, is just stuck in a narrow range around 200. Although third quarter financial reports are expected, it still opens high, closes low, and can't break the brown 200-day moving average. In the short term, if it can't get past this 200-day average, treat it as a short-term trading stock, buying and selling for price differences. So for resistance at the high end, just look at this 200-day moving average. For support at the low end, you should watch this neckline. In July, August, and September, this bottom neckline is held up and hasn't been broken yet, so as long as it doesn't break, you should treat this blue neckline as short-term support. The resistance is basically the 200-day moving average. When it comes down to the neckline, you can buy a little and clear your position, and when it rebounds and gets close to the moving average, you sell once. You can only do this kind of short-term trading for price differences unless one day its structure changes, or unless one day its fundamentals or its AI theme really bring long-term growth to its revenue and profits. Progress and support, at that point, it would have a chance to break through the 200-day moving average, but right now it doesn't. So in the current situation, even though it has some AI-related themes and wants to get in on the action, it just can't. Its recent stock price is basically stuck between the neckline and the 200-day moving average. So if you own shares of this company, just keep an eye on it. For now, it's still more of a short-term fluctuation. All right, and in addition, when it comes to cancer prevention and anti-aging, the benefits of this chocolate are really, really good. Pretty great, actually. Okay, now let's take a look at what I mentioned earlier, Infineon. Infineon's financial report is actually a bit better than GlobalFoundries, which we just talked about. Why is that? Because it has a turnaround story. Infineon said that its revenue for the third quarter was about 3.9 billion euros. Since it's a German company, the numbers are in euros. That's a 6% year-over-year increase. They mentioned that because their automotive business is gradually recovering, their net profit for the third quarter actually surged to 230 million euros, reversing the loss from the same period last year. Last year, they were losing money in the same quarter, but this year they're making a profit instead, so they've turned losses into gains. As for the estimated revenue for the fourth quarter, it's about 9% lower than expected, coming in at 3.6 billion euros. The total annual revenue is nearly 14.7 billion euros, but that's still a 2% year-over-year decline. However, it's better than expected. So you might ask, teacher, isn't that... Looking at the third quarter, at best it just managed to turn losses into profits, which feels pretty good. But the fourth quarter wasn't great either, and the annual revenue wasn't good. So why did the stock jump nearly 7% yesterday? It clearly wasn't good, so why did it go up 7%? Why? Because its future outlook is positive. This quarter was just so-so, and next quarter and the whole year aren't good either. They're all just average. The reason its stock price rose several percent is its annual forecast. What's that about? It's AI. Again, about AI. What did they say? They said they're benefiting from strong AI demand. 2026, which is actually next year. Do you remember we just mentioned that this year's total revenue is down 2% year over year? So it's still declining, right? But what they're saying is, thanks to the boost from AI demand, there's a chance that next year's total revenue could grow, ending 2 consecutive years of decline. So that's what they're talking about. It's a dream. He's painting a vision for you, painting a dream. He's telling you that for the previous 2 years, 2024 and 2025, we've been in decline. But in 2026, yes, next year, 2026, because of AI demand, we're going to see growth. And in addition, there's something else. They're going to raise their financial forecast. He said they've raised their outlook for AI power management chips. AI power is really important because it controls the power supply. Whether it's a lot or a little and how it operates, it's all about making sure the AI chip can run safely. So the AI power management chip is also very important. That's what he said. They've raised the sales forecast for AI power management chips from 1 billion to 1.5 billion euros. The previous estimate was 1 billion, and now it's been raised to 1.5 billion, which means a 50% increase. So why did Infineon's stock price surge by 70% yesterday? The reason is that even though the financial report this season didn't look great, not that good, the outlook for next year in the AI power management segment is extremely promising, which led to the stock price going up. Wow. So as for the stock price, let's keep an eye on it. Right now, every time it hits the annual moving average, it bounces up. Hits the annual moving average, bounces up. And now it's the third time. Now, about this gap, this neckline area, we haven't marked it out today, but yesterday, the neckline was crossed with a gap up. This is Infineon's ADR, and once it's crossed, there's no need to look back. Once it's crossed, there's no need to come back. If it doesn't come back after crossing, then this neckline position is basically the previous peak, the short-term highs from September and October. You can draw a line here and treat it as the support line. As long as this neckline support line isn't broken, there's really no major reason for concern, nothing to worry about too much. It's just that everyone should keep an eye on it. They've given us this great dream and vision, saying that next year AI and all that will drive good growth in their revenue. So we'll just have to check quarter by quarter to see if this inflating is really as promising as they say. But for now, as long as it's related to AI, as long as there's a boost to revenue from AI, the stock price usually rebounds easily. It's easy for it to go up. Okay, so finally, let's mention one more stock. This one is even healthier. Its fundamentals are even better. Cisco, right? Cisco, they reported that their third quarter revenue and EPS were both pretty good, both in line with expectations. The fourth quarter revenue and EPS are also as expected, so both third quarter and fourth quarter look good. And finally, it's worth mentioning that they've also received a huge order from a hyperscale customer for AI infrastructure, worth nearly $1.3 billion. And last month, they also launched Ethernet switches made with NVIDIA chips targeting the demand in data centers. They even estimate that this year's total revenue and EPS will both exceed expectations, with revenue projected at around $60 to $61 billion and EPS above $4. So you can see that their outlook for the third quarter, fourth quarter, and the whole year is all very positive, and fundamentally there aren't many issues. It's also not like the company we just mentioned, Garong Function, where although the third quarter was good, the fourth quarter's EPS performance was mediocre. Nor is it like Infineon, where in the third quarter, at best, they just turned from a loss to a profit compared to the same period last year. But the good performance in the fourth quarter was due to increased demand for AI. Of course, Cisco is different. Cisco had a good third quarter, a solid fourth quarter, and performed well throughout the whole year. There weren't any major issues. It's more like a model student among these companies. So in terms of stock price performance, it's been relatively stable. Yesterday, it went up by 3.14%. A 3.14% increase is pretty good. After consolidating, if it pushes higher, it actually has a good chance to hit a new all-time high. There's a strong possibility it could set a new record, as long as the 20-day and 50-day moving averages aren't broken. The overall bullish structure is still supported by revenue and profit, so the stock price still has upward momentum. So that's a bit of an update on the financial reports for AI and semiconductor-related companies for everyone. All right, that's all from Feng Zhu. You're welcome. Okay, finally, let's take a look at the pre-market gainers and losers in the US stock market. Cisco is up 6.9% in pre-market trading. As for Nike is up 2.8% pre-market, and DoorDash is up 1.98% pre-market as well. There are a lot of companies, but I think the most important ones are probably the ones we just mentioned, Cisco and Nike. Nike is up nearly 3% pre-market because of its earnings report during the quiet period. As for the companies that are down, Walt Disney is down sharply, almost 4% in pre-market trading in the US stock market. Why? Because its earnings report fell short of expectations, and it seems that some investment institutions have downgraded its rating. Western Digital also dropped 3.68%. Similarly, Seagate Technology fell by 3.5%. As for Advanced Micro Devices, AMD, it slipped 0.9% pre-market, and Micron Technology also declined, down 0.86%. So today, looking at the US stock market, at most, Cisco's holding up the market a bit among the gainers, but among the losers, there's some biotech stocks and some electronic stocks as well. But honestly, the declines aren't that big, so today's market is more on the side of a slight dip. The market is fluctuating with small ups and downs. In the futures market, compared to the US stock market before open, it's following this trend. The Dow Jones Index hit a new all-time high yesterday, rising 0.68%. Monthly and quarterly moving averages remain bullish, so the price stays high. It keeps edging higher, moving up step by step like climbing stairs. As for the Philadelphia Semiconductor Index, it also rose by 1.47% yesterday, staying above the 20-day moving average. Now, regarding the Magnificent Seven, although they dropped by 1.19% yesterday, they're still above the monthly and quarterly moving averages, so that's not too bad. Looking at the individual stocks among the Magnificent Seven, it seems that Meta is performing relatively weakly. Meta is weaker, while some others are still very strong and remain at high levels. For example, like Google, for example, and Apple are both doing well. As for Tesla, it's more like it's consolidating at a high level, moving sideways. Amazon's performance is also pretty good, still holding up well. And Nvidia, let me add a bit more about Nvidia. Anyway, for these stocks, just remember, whether it's Nvidia or companies like AMD, and as someone asked earlier about Nvidia, as long as the 50-day moving average or the quarterly moving average hasn't been broken, there's no need to worry too much unless the moving averages start to turn downward and act as resistance, changing from an upward trend to a downward one. So if the price pulls back to the quarterly or monthly moving average, you can just clear out your position and buy a little bit. But as long as it doesn't break below the quarterly moving average, or if these moving averages start to curve downward, then you should sell on any rebound. But is that the case right now? For many stocks, that's not happening. At least for the major indices, that's not the case. As for the Magnificent Seven, some of them are showing this, some aren't. For some related individual stocks, just take a simple look at your own holdings. Which ones are relatively weaker and which ones are relatively stronger? For example, let me give you an example. Like we just mentioned Cisco. Cisco is considered a strong stock because it's above both moving averages and the moving averages are trending upward, right? As for Infineon, both moving averages are more or less flat. So at best, after moving sideways for a while, if there's some positive news, it might go up a bit. After consolidating, it's similar to the concept of Shandong, but for something like Gorin Defense, it's more of a weak, fluctuating trend. So it's pretty simple. By looking at how these moving averages behave and combining that with the fundamentals, you can tell which stocks are likely to be stronger and which ones are more likely to be choppy. So just analyzing it this way is enough. Alright, so far, things have been going pretty well as we talk. We've been at it for 44 minutes, and maybe I haven't had a chance to answer some of your questions yet, but that's okay. If there's a chance tomorrow, we can chat more in detail. For example, just now, Desmo asked why Circle dropped more than 10% yesterday. Today's earnings report was pretty good, so I'll discuss it more tomorrow. The main issue is some technical problems, mainly technical factors causing trouble. Also, things like stablecoins, market adoption isn't high yet, but I'm still optimistic as more competitors are entering. For example, Jeffrey asked why Meta keeps dropping. For Meta, it was mainly an earnings report issue before. The report wasn't bad, but if I remember right, this quarter's EPS missed expectations because they had to set aside a provision for something. What was it called? It was a one-time tariff prepayment cost, so their EPS dropped significantly. The big miss was because of this, which is why Meta's stock plunged. That's the situation. As for other questions that I didn't have time to answer, I'll address them one by one in class tomorrow. Alright, that's all for tonight's updates. Before the US stock market opens, I'm bringing you the first batch of news. When class ends, remember to like, subscribe, and share for us. Finally, I wish everyone smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.